Panick, and I am a senior ERISA consultant at the Retirement Learning Center. Welcome to our regular segment on Case of the Week. As a reminder, these are real-life cases drawn on calls to our consultants on the resource desk from financial professionals all over the country. Today's question is in regards to the new self-correction process under the Department of Labor's Voluntary Fiduciary Compliance Program, or VFCP. The DOL's VFCP permits plan fiduciaries to correct certain fiduciary breaches by formally applying to the EBSA for approval of the correction. Under the VFCP program, a plan fiduciary must file an application to the EBSA that outlines the details of the failure and how it was corrected. If the correction is approved, the EBSA will issue a no-action letter to the plan sponsor. This letter gives the plan sponsor the assurance that the EBSA will not take any civil enforcement action, including legal action or the assessment of civil penalties against the plan sponsor. Plan sponsors may also seek relief from the excise taxes for certain failures through the VFCP process. As the VFCP stood, and unlike the IRS's plan correction program, there was no self-correction option for plan sponsors. However, on January 14, 2025, the DOL released new rules which added a self-correction process to the VFCP. Specifically, the new procedures permit a plan sponsor to self-correct two of the most common plan errors: delinquent participant contribution and loan repayments, and eligible inadvertent participant loan failures. Participant contributions and loan repayments are considered delinquent when the employers retain these payments beyond the time permitted by the Department of Labor. Under the new program, plan sponsors can self-correct this error as long as the plan sponsor calculates the lost earnings on the delinquent payments using the Department of Labor's online calculator, and the lost earnings owed on the late deposits are $1,000 or less. The delinquent payments must be deposited within 180 days from the date of withholding from the participants' paychecks or the date of the receipt by the employer. The plan sponsor must pay out penalties, late fees, and other charges, and the plan sponsor must file a self-correction notice, or SCC notice, which provides the name, email address, and tax identification number of the plan sponsor, the plan name and 3-digit code, the number of participants affected, and a description of the failure, including but not limited to the date the failure occurred, the date the failure was corrected, and the amount of lost earnings. Similar to the traditional VFCP correction, in order to be eligible to use the self-correction program, neither the plan nor the plan sponsor can be under investigation by the Department of Labor. If a plan sponsor corrects under the self-correction program, as previously said, it must notify the EBSA of the self-correction by submitting the SCC notice with the required information through the EBSA's website. The plan sponsor must also keep all documents relating to the correction, including the SCC retention record checklist and a penalty of perjury statement in the plan's records. Unlike a correction under the VFCP, a plan sponsor will not receive a no-action letter. Instead, the plan sponsor will simply receive an email acknowledgement. The late contributions will still need to be disclosed on the Form 5500. The self-correction process also permits correction for inadvertent plan loan failures that are eligible for correction under the IRS's Employee Plans Compliance Resolution System. Inadvertent plan loan failures include noncompliance with IRS rules regarding the amount, duration, or level of amortization of the loan, loans that default due to a failure to withhold from participants' wages, failure to obtain spousal consent for a loan, or allowing a loan that exceeds the number of loans permitted under the plan. Similar to the correction for delinquent contributions, plan sponsors must notify EBSA of the self-correction by submitting the SCC notice and complete and retain the relevant documents and penalty of perjury statement. However, the SCC retention record checklist is not required for the correction of this failure. In addition to the changes to the VFCP, the DOL has amended the Prohibited Transaction Exemption 2002-51, which provides relief from certain excise tax provisions of the code to provide excise tax relief for these self-corrected failures as long as the SCC acknowledgement email is received. The amendment also removed the requirement that prevented an applicant from receiving excise tax relief if it had been granted such relief in the previous 3 years. The self-correction process to the VFCP is a much needed and welcome addition for plan sponsors and will make it easier for plan sponsors to correct the most common errors and seek excise tax relief. As a financial advisor who works with plan sponsors, you can play a pivotal role in helping them with cases such as this. If you are looking for a more in-depth written version of this case, you can find it on our website, retirementlc.com.